From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, my voice is certainly in bad shape. Very similar to what the stock market is doing. We have seen a decline in the stock market when this show aired of about 7 or 8% in the last 2 days. This was right after the announcement of the world tariffs by Donald Trump and then the retaliatory tariff from China on U.S. goods. The market fell tremendously. The market was hurt. A lot of retirees felt that hurt in their 401ks. And if this is still going on by the time you hear this, you need to be aware of steps to take to safeguard against further losses. One of the big pieces is making sure that you are ready to weather the storm, but also knowing where you're headed and how far you have to get there. So it might be wise to take a look at your portfolio and figure out three things. How much income do you need? How much of an income gap do you have? And how should you be investing your money to make sure that that income gap is filled? If you're close to retirement, it might not be a bad time to start thinking about taking some chips off the table. We can help you in that assessment. So again, thanks for dealing with me and my voice here, but I'll tell you, our team is standing by to assist you. If you have fears or worries about your retirement, don't go at it alone. 270-600-PLAN will get you in touch with our team. Without further ado, let's get to this week's episode titled Navigating the Waters of a Tariff War. Enjoy the show. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. This week's show is going to directly address what is going on in the stock market right now and steps you should be taking to help your retirement stay on track. And we're going to make sure that you are aware of a few things you should be doing right now in the market, depending on where you are in your journey. The last thing we want to do here is panic. So let's make sure that doesn't happen. Now, if you're a listener of the show, you're probably familiar with my voice and you know that what it sounds like right now is not what it normally sounds like. I am suffering from some kind of sinus or allergy thing that's going on. And long story short, I lost my voice about midway through the week. It progressively got worse until all of a sudden it came back. So thankfully, it's to the point where I can at least chat with you today. And while it doesn't sound pretty, it definitely is better than it was. And with what's going on in the market, I could not stomach just playing a show, a re-airing of the show, because I want to talk with you specifically about how you should be reacting right now in this market that we find ourselves in. If you're not familiar, the market has recently entered into a sell-off, and it's a pretty steep sell-off. A lot of things have transpired over the last even 48 to 72 hours, and we're kind of at this point where we're at war, if you will, and the U.S. economy is the battleship. So let's talk a little bit about that. But before we get into any of that negativity or what may seem to be negative, and I promise you by the end of the show, I'm going to give you some hope and some things that you can be doing to make sure that things do stay where you want them to be. But before we get into any of that, what I want to bring to you is the pause for positivity. This pause for positivity is intended to help us realize together that it is our job, not someone else's job, to love our neighbor. It is our job to hug them. It is our job to feed them, to clothe them, to help them if they are in need. It is our job, not someone else's job. We have a tendency to think that someone else can impact the world. I've got enough problems of my own. But the reality of the fact is that we all need one another. And I know the listeners of this show, I know the type of character that you have. You have the character to impact those around you. And I want to encourage you with this story to do the job that is important. Don't allow or wait for someone else to do it. If you see it that needs to be done, do it. And this story is about 4 people named everybody, somebody, anybody, and nobody. There was an important job to be done, and everybody was sure that somebody would do it. Anybody could have done it, but nobody did it. Somebody got angry about that because it was clearly everybody's job. Everybody thought anybody could have done it, but nobody realized that everybody wouldn't do it. It ended up that everybody blamed somebody when nobody did what anybody could have done. This is a story that's very similar to the story of the Good Samaritan. And if you're familiar, you know the story that Christ told about a Levite and a priest that passed by a man who needed help, who needed some care. He had fallen a prey and victim to being robbed and beaten on the side of the road. And then after the priest and then the Levite pass him by separately, thinking they had too many things to get done, too many places to be. They were late for whatever it may be. Maybe even the priest said, I've got to go preach a sermon. And the Levite said, I've got to make a judgment. The Good Samaritan comes by and he sees this man who he does not know and takes him up, puts him in an inn on his own dime, clothes him on his own dime, feeds him on his own dime, and nurses him back to health, and charges nothing to the man. The Good Samaritan, and if you know the Bible, you realize that the Samaritans were the least amongst all Jews. They were inbred. They were a hybrid. They were a nobody. And this Good Samaritan did what nobody would do. This is the story that I share with you today because I think this world needs you. This world needs your impact. So I'll share with you one more time this story about 4 people named everybody, somebody, anybody, and nobody. And I want you to think about this as I read it slowly. We're going to take a break and we're going to come back with retirement matters. Here's the story. There was an important job to be done, and everybody was sure that somebody would do it. Anybody could have done it, but nobody did it. Somebody got angry about that because it was clearly everybody's job. Everybody thought anybody could do it, but nobody realized that everybody wouldn't do it. It ended up that everybody blamed somebody because nobody did what anybody could have done. You have the power, we have the power, I have the power to change this world one person at a time. And if you believe that, then be looking this week for someone you can impact in a positive way, with a hug, a smile, a word of encouragement. Maybe it's physically giving them something that they are in need of, or maybe it's just being there for them emotionally, being a set of ears, being a heart. This world needs love, that's for sure. And the one who loves us like we should love others is Christ. I think the world needs Christ. And it's our job to share that. Now, we're going to go to a quick break, and we are going to get into what's going on in the markets, and we're going to talk about retirement. But if you can't catch the rest of this show, I do want to remind you of our upcoming Social Security and Retirement Readiness class that will be held on April 28th at the Taylor County Public Library from 6 to 7:30. I will be there. Other members of the team will be there. We'll be there to help you understand what you need to be doing with the money you've saved for retirement in order to get ready for Social Security and retirement income phase. The steps that you need to be taking are important, and they are different than the ones you've been taking to get to where you are. And we're going to show you what it needs to look like. So again, April 28th, 6 to 7:30, there will be time for questions and answers. If you're over the age of 60 and you've saved money towards retirement, you just want to make sure you're ready, this class is for you. 270-600-PLAN to RSVP and save your seat in the class. We'll see you there. Don't go anywhere. We're coming back with more Retirement Matters right after this. Ladies and gentlemen, this is your captain speaking. Looks like we have about a 72% chance of a successful landing today. Did you catch that? A 72% chance of success? No one would fly on this airline. But you'd be surprised how many people take this approach to their own retirement. This is Dale Smothers, your host of the Retirement Matters Show. Join me right here each week as we discuss ways you can gain confidence in your retirement plan. Good decision-making, time-tested strategies, and a well-written plan will allow you the luxury of relaxation, even when you're going through those panic-inducing turbulent times. As the host of the Retirement Matters Show, we will teach you how to keep your retirement on track, making sure that your destination is everything you wanted it to be.
Tune in for the Retirement Matters Show with Dale Smothers. Also, check out the Retirement Matters podcast. Just search for Retirement Matters with Dale Smothers on the podcast platform of your choice.
All right, welcome back to the show. And if you're just catching the show, I want to give you a fair warning. My voice has gotten better than it once was, but it's definitely not back to normal. And if you listen to the show very often, you can tell. So I hope that my voice is not too much for you. I know it's got to be hard to listen to. Perhaps it's not the prettiest, but here's what I know. I know that it was important for me to come and talk to you this morning because the market has been in a sell-off, and that market sell-off invokes fear. There was a recent storm that came through Taylor County where I live, and in that storm, one of our billboards got knocked down. It got ripped completely to pieces. Well, this particular billboard had a picture of money on it. One of my clients shot me a text, said, "Hey, did you realize that your billboard was down?" Well, I hadn't realized it at the time, but when I saw the picture, immediately I thought this is probably what some retirees feel when they take a look at their retirement account. While many of the retirees are maybe logging into a 401k over the last couple of days and seeing their accounts look like they've been ripped in half, or they've been torn to shreds. That is a terrible feeling. You know, the picture of my billboard didn't make me feel very good, but it definitely didn't upset me. It's a storm. It happens. But if I was depending on that billboard to bring in all of my future income, that would be a scary feeling. And that's what a lot of retirees are feeling right now. So I want to talk to you about ways that you can maybe repair that account. Maybe a way or two that you can start to see if the account is still plenty to accomplish what you want to do. And if so, how do we just make sure that the next storm that comes through doesn't completely wipe it out? Different people are in different states. So I want to talk to you specifically about where you are in your plan, where you are in your journey. And to do that, of course, we need a little bit more details. And we would love an opportunity to sit down with you one-on-one. And that's as simple as calling our office, 270-600-PLAN. Getting in a time and an appointment with one of our team members and really starting to dig deeper on what the next step needs to be in your retirement future. But what we've seen in the last couple of days has a lot to do with what we call retaliatory tariffs that we placed on countries all over the world. And if we use the analogy of a battleship, the U.S. economy is a very strong, very mighty battleship. She can withstand a lot of damage. And the bottom line is this battleship recently launched an attack. And we launched an attack on many, many countries, but our primary focus was most likely China. It was top on the list. It was our first strike. And those tariffs are set to go into motion next Wednesday. Unless some tweet comes out that changes that, China knows that they're going to be taxed at as much as a 34% additional tax over and above what they are already. Now, that's not something that I want to debate politically. I do believe that something needs to be done about our unfair trade balance. But this type of attack was somewhat a surprise attack. And China retaliated. Now, on Friday, 6 a.m., we get a text or a tweet or an email, however world leaders communicate now, from China that says there will be now a retaliatory 34% tariff on all U.S. goods. Well, almost instantly, the markets begin to sell off. Now, at 6 a.m., the markets are not open,
but we do have ways to trade outside of normal hours at the New York Stock Exchange. And we could tell, I opened up the apps and all the software, and immediately at 7 a.m., I knew things were going to look bad on Friday as well. But what we've got to keep is some perspective. And I want to give you a little bit of that perspective. Over the last year, the S&P 500 still has averaged a little over 5%. On the upside, the S&P 500 is not an index that is completely dead. The NASDAQ has done much better than that over the last 12 months. And while this most recent sell-off, the last couple of days, has certainly been a blow to our ship, it's been a direct hit on the U.S. economy and the U.S. market, I don't think that it sinks us in any capacity, but it does invoke fear in a retiree's account. So here's my take on what's going to transpire over the next, say, 6 months. At some point, cooler heads will prevail, world leaders will get together, and things will settle out to be a lot less severe than what they currently seem. And with that, markets will adjust. The markets have been oversold. There's no doubt about it. It was an overreaction to an overreaction, as I like to say. The Fed will likely start to discuss rate cuts, which will stimulate the economy, and the market looks in the future. It doesn't look at today. On Friday, we got a good jobs report, but I do expect those jobs reports to look a little bit more bleak on the next report that comes out, because that will also take into effect the government cuts that recently took place. So a lot of our barometers or our metrics will start to look a little bit bleaker, but the market isn't concerned with today as much as it's concerned with tomorrow. This is why we saw the crazy sell-off, because we had already priced in some tariffs, but not nearly as many, not nearly as high as what was announced. So I'm not concerned in the long term, but I'll tell you this. If you are 3 to 6 months away from retirement and you have not already crafted a plan, now is the time. Give our team a call, 270-600-PLAN. If you're 3 years away from retirement, you also should have been crafting plans. Again, our team can help, 270-600-PLAN. It is not too late to craft that plan. There's a very good chance that you have plenty of money to still accomplish what you've been trying to accomplish, even with this most recent blow. But here's what I know. I know that by sitting down with our team for 1 hour of time, it will make things a lot clearer for you in your unique situation. Where you are in retirement becomes very clear after meeting with a retirement income specialist, especially as you approach the retirement income phase. There are 3 key steps that you must take to ensure that you are ready to retire. Number 1, you've got to have an income target. How much money do you need every single month? Once you know that, and if you don't know that, our team can help you work towards that. Once you know that, then we have to understand what our income gap is. How much of that income need, and number 1, needs to be generated from your investments. That's number 2. And number 3, how should we invest our money to achieve that income gap? It's that simple. That's the income piece of the income plan. It also incorporates the investment plan. And from there, we begin to work towards making sure that your taxes are efficient, your health care is covered, Medicare is secured, and we've got long-term care plans in place. From there, how much money do you want to leave to your loved ones? And let's adjust any of those other plans to make that happen. This is Retirement Planning 101, and we're going to cover every bit of that in this class that we are having on the 28th of April from 6 to 7:30 at the Taylor County Public Library. If you would like to be in that, or you would like to set up a time to talk with our team in a one-on-one setting, give us a call, 270-600-PLAN. Again, that's the Social Security and Retirement Readiness class on April 28th, Taylor County Public Library from 6 to 7:30. We'll see you there. Now, we're going to take a quick break. We're going to reset. We're coming back with more Retirement Matters. If you're over the age of 60, you are going to want to hear what we're going to discuss in this next segment. We'll be back right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. I want to talk to you about what we're doing right now with client portfolios. Right before the tariff announcement, we actually had some cash raised in our portfolios for our clients in anticipation of a potential pullback. However, it's impossible to understand or even know what the market is going to do any given day. So when do we deploy that cash back into the market is kind of one of those things that we're waiting to see. But at RDS Wealth, we are not opposed to holding some cash on the sidelines. We do not advocate timing the market. That is not at all what we're after, because that is a loser's game more times than not. But it's easier to see things that are written on the walls, like we're going to announce tariffs and the market reacting unfavorably to that. With that being said, we also balance portfolios with what we call our risk-off platform. And this gives us a great deal of protection against market downturns, and the ones that we're seeing right now, like right now in the market. We've got a lot of clients that have money that's just been setting and behaving as if it were setting in cash. But when the market actually goes up, like it did last year, we see growth in those accounts. So in other words, when the market goes up, your money goes up. When the market goes down, your money doesn't go down nearly as much. And this type of approach is what we use for those who are close to retirement income phase. If you're over the age of 60, you likely have, if you're a client of RDS Wealth, and again, we have kept in touch with our clients. We've sent out videos. We send out market commentary every week. If you'd like to be a part of that market commentary, just send us an email, contact@rdswealth.com. But we are very much in touch with our client base. And we know every year we sit down with them to address what their desires and their goals are. What is their objectives in retirement? And at those annual strategy meetings, we detail why we are making the changes that we're making to the portfolio, why we are putting money in the market the way that we're putting it in the market. Now, when we get to a market correction like we're seeing right now, our clients are not hit nearly as much as the stock market is hit, because we are not directly tied to the stock market. We have indirect correlation, is a fancy way to say this, when the markets are falling. But when the markets are climbing, our correlation is pretty tight. We have direct correlation with uptrends and indirect correlation with downtrends. We use a hedged equity approach, if we want to get real technical about it, that gives us the ability to detach ourselves from some of the falls in the market. Now, what this is essentially doing is helping alleviate the downturns in market performance and making sure that our clients aren't taking too much volatility into their portfolio. There's fine adjustments that have to be made as we approach retirement income phase. And if that's something you would like to see a little bit more in your portfolio, just give us a call, 270-600-PLAN. Simply put, these waters that we are navigating through right now are not only choppy, but they're full of mines. Don't do it alone. We're here to help. We can assist you in all of the things that you need to be avoiding in retirement. And while we're all feeling the choppiness of the water, there are hidden mines along the way, like paying too much in tax or health care. The price of everyday living is on the rise because of inflation. Have we actually calculated that? And what do we do to make sure that the long-term care facility doesn't take the farm, the family farm? These are all hidden mines, and our goal is to help you navigate those waters successfully. And it starts by building the income plan and then making sure we're taking advantage of the tax code and taking those funds out as tax efficiently as possible so that you can spend them now or spend them later, having already paid the taxes on that money. We would love an opportunity to discuss those with you. And again, all of this will be covered in our class. Our upcoming class, our Social Security and Retirement Readiness class, is going to be taught. It's going to be very much focused on those over the age of 60 who have saved some money for retirement. I'm not talking about people who are just getting started at 60. I'm talking about people who have some money that are really concerned with the market risk, really concerned if they're going to be able to still retire, and really concerned with what it is they have to be getting ready between now and retirement date. If that retirement date is one day away, maybe it was a year ago, maybe you just retired a year ago and you're concerned, or maybe you've got 4 or 5 years left until you retire, this class is for you. 270-600 plan will get you in the classroom. Again, 270-600 plan, get you in the classroom free of charge the 28th of April from 6 to 7:30 at the Taylor County Public Library. It's free of charge, but I'm sure that the seats will be limited and be taken fast. So if that's interesting to you, get in touch with our team and we'll make sure that we get you on the list. When we come back, we are going to discuss a couple of specific investments that you should maybe consider in times like this and ways to utilize them in your own portfolio. Don't go anywhere. We're coming back with more Retirement Matters after this quick break.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. Let's get into some specifics on things you could be looking for right now in the market. I'll tell you, technology has been sold and probably oversold in this most recent tariff war. You've got to think that cooler heads will prevail, and that as cooler heads prevail, you will see the things that have been oversold purchased and bought right back up. So there is going to be a transfer of wealth in this country through this mess. There is going to be a great deal of people who sell at the lows to institutions that are willing to purchase these stocks from you at these steep discounts. Do not be that person. Do not sell without a plan. I'm not here to tell you you can't sell anything, because you definitely probably should be selling some stuff, especially as you approach retirement income phase. But don't just sell unbiasedly. Be sure you scrutinize what you're selling and why you're selling it. Have a plan for where that money's going and when it's going to be deployed. And if you have money that's available to purchase and you have growth mindset, this is money that needs to grow, aggressively grow, Dale. And I'm okay with the ups and downs. Be looking at technology. However, if you do not want to experience those ups and downs, then you need to stay away from technology. But here's the catch. A lot of mutual funds that are growth focused are also in technology. So how do we stay away from technology? Well, we might need to purchase things like consumer staples, which are doing fairly well through this mess. We might want to purchase things like energy, which stands a chance to rebound very nicely. We might want to purchase those sectors that are likely to succeed in times like these, and we can explain those to you in greater detail. Other investments that you may want to consider are hedged equity ETFs or funds that, again, decorrelate on market downturns. They protect your money in series of downturns like these by utilizing puts and calls on the S&P 500. This is a very key strategy that we use at RDS Wealth. If you're a client of our firm and you're listening to the show, know this. There is a great deal of your money that is setting in positions just like this for times just like this. Market downturns have to be severe to actually force us to lose money. When I say severe, I'm talking 15% or more. We have a lot of clients who have a lot of money that's protected against as much as 15% or more downside movement on the market. That means that if you had purchased the S&P 500 back in January, today you're down 9, 10, 11, 12%, depending on when you purchased it in January. And this would have protected us all the way down. But if the market goes up, see, it's not enough to just say, well, we won't lose any money. We also want our money in a place where we can make money when the market's doing well. And these hedged equity ETFs, these hedged equity strategies will help tremendously in accomplishing that objective. Another traditional way to protect against downside market movement is bonds. And I'm not against bonds, specifically treasury bonds. I like these in short duration for places to keep money dry during times just like these. We have a lot of clients that we've recently moved into short duration bonds to protect against market downturns just like this, so that we can then deploy in these lows the money as it matures. This is a strategy that we could help you utilize. And if you would like a little bit more understanding about how we can do that in your unique situation, either head on over to our website at rdswealth.com or simply give our team a call at 270-600-PLAN, and together we will start working towards the retirement you've always imagined today. All right, guys, that is the end of the show today. I hope that I've given you a little bit of insight on what has taken place and ways to help make sure your retirement is on track. Again, we are going to have a class on April the 28th from 6 to 7:30. Do not miss this if you're close to retirement or you are concerned at all about the money that you've saved for retirement and whether or not you are actually ready. This class, Social Security and Retirement Readiness, April the 28th from 6 to 7:30. To RSVP, simply call our team, 270-600-PLAN. I hope to see you there. But whether we talk to you in person next or right here on the same station, always remember, save money, plan well, and live happy in retirement. God bless.
Investment advisory services made available through AE Wealth Management, LLC. AE Wealth Management and Artie Smothers Wealth Management are not affiliated companies. Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Artie Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Artie Smothers Wealth Management.